Hi there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Today is Friday, and welcome to another edition of Java with Jared. I've got my coffee here. Hope you guys are doing great. And I wanted to let you know what happened with interest rates this week. We had a very busy week with the Fed meeting, with what's going on with Europe, and also the jobs report, which was released today. So overall, this week, rates finished slightly worse than where they were at the end of last week, but they were off from the midweek lows in interest rates. Highs for the price of mortgage-backed securities, which translates into lower rates. And midweek, we saw rates really great. I mean, they're still great right now, but they're off the midweek best levels because of what happened with the jobs report. But here's what happened this week in the economic data. Now, overall, there was no major news from Europe with all the Euro drama. There's just a bunch of talk and noise and everything going on in Europe, so nothing's really changed there. But here on the national level, we did see a lot of economic data that came out. On Tuesday, consumer spending laid a goose egg. It was zero. That shows the consumer is not out there spending, and that helped interest rates a little bit. We also saw the PCE come out, which is the Fed's favorite gauge for inflation. PCE means the Personal Consumption Index, what people are spending their money on and what prices are doing there. And that showed an increase of only 0.2%. Expectations were for 0.1%, so right in line, shows inflation is under control, and that's also good for interest rates. Consumer confidence was slightly higher than expectations, but nothing real big. On Wednesday, the Fed met. Well, Tuesday and Wednesday they met, and Wednesday they released if any change would be happening for monetary policy. There's no change, and there was no announcement of any QE3 or quantitative easing 3, and that's what the market was looking for. The Fed did say that they were prepared to take any action, but they didn't say that there was going to be any action taken. So eyes will be on the next Fed meeting in September. So here's what happened with the jobs report today. The expectations were for about 100,000 new jobs added. Non-farm payrolls actually increased greater than expected, 163,000 again versus the 100,000. And on the personal, or not the personal, but on the private sector did increase about 175,000 new jobs added to the market, which was better than expected, but it's still not a very good number. We need about 125,000 jobs added to the economy each and every month to account for the new people coming into the workforce. So at this pace, we're not going to really make any major dent into the overall jobs and unemployment rate. And actually, the unemployment rate went up to 8.3% versus 8.2%. The reason that went up, even though the non-farm payrolls increased, was because there are more people re-entering the workforce that were not looking for jobs previously, so they were not counted on the unemployment rate, that are now looking for jobs, and so now that unemployment rate goes up, even though a little bit more, a few more jobs were added. So all that has, made interest rates, at least with the employment report, get worse today. They're still fantastic, but the market is reacting a little bit negatively to more jobs being added to the economy, even though it's pretty flat than what was expected. So that's what's going on with interest rates. I hope you guys are doing fantastic. Hope this information helps and helps you communicate to your clients when you're out there and they're asking about what's going to go on with interest rates. Again, I think we're in a real low period. I don't expect that today's negative movement is going to really translate for the long term, but we're off some of the absolute best interest rates from earlier in the week. So hope you guys are doing great. If you have any questions, please give me a call. As always, have a wonderful weekend and a great next week, and we'll be back with you with another edition of Java with Jared. Take it easy. Bye-bye.